Ladies and gentlemen, good day and welcome to Sobha Ltd Q4 FY2024 results conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Adhidev Chattopadhyay from ICICI Securities. Thank you, and over to you, sir.
Good evening, everyone. On behalf of ICICI Securities, I'd like to welcome everyone to the Sobha Ltd call today. From the management, we have with us Mr. Jagdish Nagineni, the Managing Director, and Mr. Yogesh Bansal, the Chief Financial Officer. I now like to hand over the call to the management for their opening remarks. Over to you. Thank you.
Good evening, everyone. Thank you, Adhidev and team, for your introduction and organizing this call. Sobha team and I are happy to interact with you post the financial results of Q4 of the financial year FY2023-24. In this call, we will very briefly touch upon our last quarter and 12-month performance and provide an outlook for the next year. Firstly, on real estate sales, FY24 was the best year for us on all fronts. Sale value of 6,644 crores, an increase of about 28%, area of 6.08 million square feet, and an highest ever average price realization of 10,922. In Q4, after 10 quarters of higher sale than previous quarter, we took a breather and we landed at about 1,500 crores of sale with 1.34 million square feet area. Overall for the year, about 66% of the sales are from Bangalore and 58% of this quarter sales have been contributed by 2 crore plus ticket size. Secondly, on the project launches, we launched a total of 7 projects in the last year with 7.03 million square feet, all of them in Q3 and Q4. In the last quarter alone, we launched 4 projects: Sobha Crystal Meadows, Sobha Elysia in GIFT City, Sobha Ridge in Trivandrum, and Sobha Atlantis Phase 2 in Kochi. Last year, our contracting and manufacturing have also been steady at 683 crores, with a small degrowth in some of the sub-verticals. At the end of this quarter, we have a potential new launches of 16.85 million square feet and an existing inventory of 7.55 million square feet, making a robust inventory visibility of 24.4 million square feet. Of the remaining unlaunched inventory of 16.85 million, we plan to launch about 9 million square feet in FY25 and the remaining subsequently. That would be an increase of about 30% from the previous year of 7 million square feet launches. In addition to this, we are working rapidly to bring the remaining land bank also into the project stages, which we estimate to have a potential of between 25 to 30 million square feet. We will keep adding to the future launches as the work progresses in this year and the next. Positive cash flow generation has been our focus and it continued last year as well. Details of the cash flow and other financials will be taken up by our CFO. I request Mr. Yogesh Bansal to take you through the same before we open for questions.
Good evening, everyone, and thank you for joining us today. We would like to share our financial performance of FY24. We achieved the highest ever operational cash flow of rupees 5,797 crores. In this, about 5,734 crores were contributed by our real estate business, making it the highest ever collection year in Sobha's operating history. This was possible due to increased sales and also hitting more construction-linked milestones across our ongoing projects, leading to higher billing and collections. This enabled us to increase our spans across businesses and functions to help our growing scale and expedite construction activity in the projects. We have generated highest ever net operating cash flow of 1,089 crores, Higher inflows has also helped us reduce our dependence on short-term financial instruments. Thereby, there is reduction in our interest cost. In line with our commitment to balance growth and financial discipline, we have spent a net amount of 383 crores towards land and new opportunities. Q4 24 was the 14th consecutive quarter of debt reduction. We reduced our net debt by 81 crores in the quarter and 377.5 crores in the entire year. Our net debt to equity is now at a comfortable level of 0.5 compared to 0.66, which was as on 31st March 2023. These achievements are a clear reflection of our commitment to maintaining financial discipline and balancing a sustainable growth at the same time. Looking ahead, from our residential real estate business, we have an estimated marginal cash flow of rupees 14,934 crores to be realized. Of this, 8,393 crores is expected to be contributed from our ongoing projects. Additionally, we have a robust pipeline of 16.85 million square feet expected to be launched over the coming 6 quarters. These forthcoming projects are expected to generate 6,531 crores of marginal net cash flow. Our prudent approach to capital management coupled with cash flow visibility puts us on a solid financial foundation to seize new growth opportunities in future. On the P&L side, during the financial year, our total income is rupees 3,218 crores with an EBITDA margin of 12.4%. Out of this, about 1,953 crores was contributed from property development. This year, revenue largely comprised pre-sale made 4 years back. In the quarter ended 31st March 2024, our income was 791 crores, of which 491 crores was from our residential business. We have a balance revenue of 13,515 crores from the whole residential unit, which will be recognized in the next 3 to 4 years. We expect the margin to be improved significantly from this whenever we recognize balance revenue. For our Q4 24, we recorded a PAT of 7 crores and for the year PAT 49 crores. Would like to thank you all once again for your participation, and now we can open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Yes, sir. Hi. So my first question is on the launches. So we did some launches in Q4. So Gift City launch, the Meadows launch, and I think that followed up with launching Gurgaon at Karma Lakeland. So if you can help us, how has been the response to these launches? That's my first question.
Good evening, Parikshit. Yes, we did these launches and the response has been quite good, and it will be the sales of this response will be reflecting in Q1 because the launch of the Gift City and Crystal Meadows has been towards the end of the previous quarter, Q4. So majority of the sales will flow in Q1. And the response has been quite good according to our expectations.
Okay. So what was the total, I mean, so between the 3 projects, Meadows, Gift City and the Karma Lakeland, so how much is the total value of worth of inventory released, or like in 1,000 crores, or if you can help us in million square feet, so that will be helpful. How much of the inventory you have released to the market?
So the total inventory for this would be about 7,500 odd or so, and we have released about 20% of it for the market.
So only 20% has been released?
Yes.
Okay. And what are the balance for this quarter? So what are the other projects which are looking to launch in Q1?
In Q1, like you said, we have already launched this Aranya, which is the Karma Lakeland project. And we have one plotted development in Chennai. And we have one more project slated to be done in Gurgaon. Apart from that, we have one more plotted development in Coimbatore. These are the ones which we think that we can do in this quarter.
Okay. So just one more question on that. So why you are releasing, I mean, when we are seeing in Gurgaon, I think a large part of Karma Lakeland will have the value of inventory will be high there. So why you have only released 20%? So just wanted to understand from you, when other developers are launching the entire project, why we are holding back and only releasing 1/5 of the inventory?
Well, we have several towers there, so we are doing tower-wise launches, Parikshit, and we believe that it's one of the most unique projects in entire country, which is a golf course project, and we think that there is a good value to be realized. And since there is current what we have launched is just the overall launch is about 1.9 million square feet. So of which we believe that over a period of time, as we launch, we sell and we develop, it would be more prudent than launching all and probably selling everything and having a majority of the cash flow coming in, but there is significant time for us to actually do the construction. So we would like to pace the sales also in line with the construction activity.
Okay. Just one last question, sir, on this Pune. Now we are seeing that Pune launch, one project has been added in Pune. So also we see that the Gurgaon overall launch pipeline has increased from almost 5 million to 8 million square feet. So that means we have done some new business development. So if you can help us understand what has been the new business development quarter on quarter, how much area you have added, so that would be helpful.
Yeah. So in Pune, we have added one project, which we think that the overall potential for the project is about 5 million square feet at least. However, in that, the first, we are doing it in phases, and the first 1 million square feet is what we have put it in the pipeline, and which we plan to launch it next FY2025 if it comes through. If it comes through, it adds to our overall what I have guided as 9 million square feet. We can do probably more than that.
This year we are planning to do 9 million square feet of sales,
of launches. We not launches, yes. And Gurgaon also we have added 2 more projects in sector 99 and sector 63. Both these projects also will come up for launches in the next 12 months or so.
What is the sales guidance for the full year then? I mean, because you did.
Sir, may we request that you.
That's my last question. That's my last question, if you can answer that. So just on the guidance bits on the sales this year. So are we in line to cross 10,000 crores of sales this year?
Parikshit, that would be a great aim for us. Right now, in a very high base, last couple of years we have achieved about 30% plus increase in the sales. If we continue on the path of at least 20% plus, we should be at least doing 8,500 crores. And if we can achieve anything more than that, based on the new launches that we are seeing and based on how the release of inventory, if it continues to do well, then definitely we should be aiming towards it. But on a base case, I think we should be able to do 8,500 at least.
Thank you. So may we request that you return to the question queue. Our next question is from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Thanks for taking my question. Firstly, I think on launches, you elaborated on launches that you are planning for Q1. But in this 9 million square feet, how would it be split across cities? If you can help on that.
Yeah. Pradesh, there is largely about 60% would be from in Bangalore, these launches, and about 2.8 to 3 million square feet will be from Gurgaon, and rest of it will be from Chennai and Kerala.
Okay, that's helpful. Secondly, on the land spend, now that we have seen an increase in the land spend in this quarter, what is your estimate on land spend in next year? And what are the projects and what are the markets you are targeting in terms of land acquisition?
In the long term, our focus is going to be in the large markets, which is our large markets are Bangalore, currently where we are present, Bangalore, NCR, Pune, and Hyderabad. These are the 4 cities. In addition to that, of course, we have Kerala market, which has been doing well, and we have small projects in Chennai and Coimbatore too. In all these markets, we would like to continue to increase our scope of operation, and the current what we have done this financial year, similar spend is what we envisage to do next year also, with the kind of cash flow that we would be generating, and I think that would suffice for taking care of the next couple of years of requirement, considering where we are in terms of pipeline of both existing inventory and the new launches.
So roughly 400 crore of land spend next year as well?
Yes.
Okay. And one last on margins, so just 135 billion of...
Just to add there, Pritesh, this is with the current plan, and we have started the process of rights issue last quarter. And if that comes through, which we are working upon it in the last 2 to 3 months, and we would like to take it forward as quickly in the coming weeks. Once that comes in and the capital that could be available for us through the rights issue, though that we will, and what purpose we'll be using it, and additional cash flows that we will be, it will be available for us, the actual spend on the land will significantly change from that. This 400 crores, what I was mentioning, is from the cash flow that we generate from an operational level.
Sure, got it. And one last on margins. So 135 billion of sales yet to be recognized. What kind of margins we should expect from that, and when do you see the improvement coming in? Is it from 1Q onwards or little later in the year?
Yeah. Yogesh, you like?
Yeah. So, Ritesh, currently we see we are increasing sales and marketing on pre-sale of last year, 6,634 crores, which is higher by 28%. And correspondingly, we incurred corporate overhead. That's why our EBITDA margin was low. Going forward, we are targeting with sales with higher EBITDA margin close to 30%. Plus, we are speeding up our delivery. Both combination, once it will start fructifying, we'll see higher EBITDA margins.
Yeah.
Sure, that's helpful. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Dhruvesh Sanghi from Prospero Tree. Please go ahead.
Yeah, I wanted to ask about the overall rights issue, but before that, I wanted to applaud you that finally the shareholders have got rewarded. But still, we would like the final P&L to come in, and of course, we are waiting for the margins to catch up. So thank you for the overall efforts and the direction that the company has taken under you, Jagdish. Yeah, so on the rights issue, if you can, why is it taking time? I understand that probably in the coming few weeks you will do it, But is it that the cash flow of the promoters are tied up to a certain timeline, and that is the reason for it, or some other internal planning leads to the delay?
Thank you, Dilesh. The rights issue, we had started out work on this in February itself. The time lag of what we expected and where we are today is more of technical in nature. We wanted to do the entire financials and due diligence based on past financials. But as you know, we had got a new auditor in FY2023, and we wanted to complete 2 financial years with the existing auditor and come up with the financials of that. That made some of the overall diligence part much simpler. And hence, we have waited to come out with the results for this last quarter as well. And hence, now that everything else, this quarter has ended and the financial results are out, we will go on to the best possible extent in terms of speed to move ahead with the rights issue. So it's got nothing to do with any other factors like you mentioned, but more to do with technicality.
Okay. And one broad question, because you use the word saying that the land purchases after the rights issue will be much more or significantly higher than the 400 crore otherwise planned out of your existing cash flows. On the broader sense of things, how will we take care that we are probably mid of the cycle already? We are definitely not at the low now. The land prices have readjusted across the country, and in fact, at many places and cities, much more than, the jumps have been very significant. With such a large kitty now coming in, and let's say if we think about 2,000 crores of land purchase in the next 2 years out of the new cash flows, how do we shield for the future problems which came similar to the past ones after 2008-9? I mean, are there enough such opportunities that are easily monetizable, or this will be like long-dated land purchase plans again, where we will not be able to monetize them for another 5 or 10 years?
No, it's a very valid question, Suresh. In fact, if you look at our journey in the past few years and where we are today and with the rights issue, what's happening, we are probably in one of the best possible situation in terms of availability and visibility of cash flow. That gives us a lot of leverage in terms of ability to evaluate and seek opportunities which make sense for us. We are not in the land banking business, and that's not what we would like to do with the availability of the cash flow. Like you would have seen, our marginal cash flow from the existing and the new launches is about 15,000 crores. And add to that, we are raising this particular rights also, which advances our plans. But that gives us enough firepower to deploy wherever it can be done, and we are very mindful of the cycle where we are in. We are mindful of the opportunities that where the margin of safety might be low. We are mindful of what the issues that we faced in the past, even in the existing cities and the new locations. So considering that, it is not that we would be in a super hurry to deploy and start launching. That's not the aim here. The aim here is to make the company financially extremely strong. And with this coming in, we would be, I believe that we will be one of the few players who will be reasonably well balanced in terms of financial affairs. And hence, the ability for us to create a longer runway has just begun. So,
and if I can squeeze in one small one, in terms of the pre-sales, I mean, though you don't guide, you have indicated something like, let's say, 8,000, 8,500 crores. But Usually the kind of growth a lot of our peer sets are now facing, and now they are like, it's like animal spirits are coming out, where there were not even five players touching 8,000 crores before a couple of years, and now there are more than 5 players touching about 20,000 crores of pre-sales. Should we not ramp up much faster than probably what you are conservatively guiding, or we are still not ready with the launches in the near sense? Like, why can't we go to 12,000-13,000 crores now?
You are absolutely right that the market and the scale of some of the players in the market has been significant, and it reflects the mood in the residential real estate. But you have seen our company, how we have been operating. We have increased the pace of launches. We will continue to increase the pace of launches. There is no doubt about it. What we are, although we have the 16.85 million square feet, we would like to do it as quickly as possible. If we can do better than what we are planning for, nothing like it. Not that we are trying to deliberately slow it down. That said, you know that we are a premium player in the market, and the uptake of the inventory that's there, while it's true for most of the other players, for us it might be a little bit more balanced in terms of the premium that we charge and the kind of scale of launches that we can do. Based on that, I think we think that we can do at least this what I have guided as 8,500, or what we assume that can be done. But there is absolutely no effort that we are going to leave to make sure that what we launch and what we sell will be as per the market conditions. So I do believe that there is a optimistic scenario than what we are planning, but we will take it as we go during the financial year.
Thank you and best of luck. Thank you.
Thank you.
Thank you. The next question is from the line of Kunal Lakhan from CLSA. Please go ahead.
Yeah, hi. Good evening. Thanks for taking the question. Just want to understand how much of pre-sales of, say, 66 million in this year are from, say, projects on existing land bank versus, newer land that we acquired?
During the last financial year, Kunal?
Yes.
Last financial year, all of our launches have been based on the existing land bank which we have done in the past. No new launches have been done on acquisition during the year. So 100% of the launches would be in the past, except for small sales that would have come. Small sales that would have come from the big city where we incrementally acquired some land.
Sure. So just a follow-up on that is, so I'm just trying to understand what is, say, a pro forma EBITDA margin on these sales, which are essentially from the existing land. And the reason why I'm asking is because if you look at your OCF margins, right, even after excluding, say, contractual and manufacturing business, are roughly in the range of, say, 20-odd%. You would expect a lot more considering like this is legacy land which you're launching on. So just trying to get my head around it, if you can help.
That's right. For lands that we are launching on the legacy land, the embedded EBITDA margin should be far higher, should be 40% plus. And whereas for the others, it would be slightly lower. But if you look at the launches that we have done, just like, let's say, for example, last year in Neopolis, which is on our own land, where it should be anything more than 40 to 45%. But for some of the others, it could be in a joint development projects, it might be a little lower. Having said that, in the overall, like Yogesh has mentioned previously, we have this 13,500 crores of revenue to be recognized. And in that, it's roughly about, on an average, it comes to about 30%. If you But if you break it down again and see the sales that we have done in the last couple of years, that would be about 70% of the 13,500, and that should be we should be about gross margin of more than close to 33-34%. So as we recognize these revenues of the older projects, the remaining portion of the projects that need to be recognized, that would their contribution increases, and hence the remaining EBITDA margin should improve. So we have another 2 to 4 quarters of this slightly lower margin scenario. And it also depends on the higher revenue recognition that we can do. So increased pace of completions is a key thing that we are working towards. Once we achieve that pace of completions as well, then we should be in a far better position in terms of P&L.
Actually, my question was not on P&L margins. Actually, it was on OCF margin, which is based on the sales that you're booking today. OCF divided by say collections from real estate only, that is at about 20%. So I'm just trying to get that this number should be a lot more higher than 20%, I believe.
Operating cash flow margin for the projects that we launched?
Operating cash flow margin for say FY24.
Sorry to interrupt. May I request you to use your handset, so your audio is not very clear.
Okay, I'm saying that operating cash flows divided by the cash inflows from real estate. If you exclude the contractual and the manufacturing business, that's around 20%. That's what I was trying to get.
Okay, on the overall real estate business.
Correct.
Oh, okay.
So that is at 20%, which should be technically around 30% subsidy. Considering these are all legacy projects and there's no land cost associated to these.
Kunal, we don't have a ready answer for that. Can we quickly work on this and we can take it up?
No worries. Yeah, sure. Thank you so much.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, may we request that you limit your questions to 2 to 3 questions per participant. If you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Yash from Stallion Asset. Please go ahead.
Hi, sir. Thank you for the opportunity. Am I audible?
Yes,
sir, please go ahead.
Okay, thanks. So my question is that I understand that you would like to launch 9 million square feet in FY25, right? Like in terms of the area.
That's right.
So if I, just do this simple math that, if I multiply this by average realization of 10,000 rupees per square feet, then, you get the pre-sales to about 9,000 crores. So I'm just trying to understand that, are we trying to be a bit more conservative here on our guidance for pre-sales for FY25 or maybe I haven't got the math right, or if you can just maybe explain, that would be very helpful.
So this new launches of FY25 of 9 million, probably the average price for that might be slightly higher than 10,000. And that's number one. Number two is this is the launches that we are planning to do, and not necessarily the pre-sales. Pre-sales would of course depend on the ability for us to launch these new projects and the pace of sale of the existing inventory of about 7.5 million that we have.
Right. So you're saying that, out of this 9 million, maybe, 70 or 80% would already be converted to pre-sales, if I understand right, like broadly.
Yeah, 9 million plus what we have already is about 7.5 million or 16.5 million. So, and this 9 million will come over a period of during the financial year. So, on an average, probably convert about 50% of it.
Okay, got it. Okay, thank you.
Thank you. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good evening.
Sorry to interrupt, sir. May I request that you use your handset so you're not clearly audible? very low, sir.
Hi. Good evening, and thanks for taking my question. My first question is, in the various markets that we operate, where do you believe the demand environment currently is the strongest? And the second question is, in FY24, what would have been, let's say, the price increase in the various geographies that you operate?
Good evening, Parvez. The audio was not very clear. If you can just kindly repeat the last couple of sentences, that will be helpful.
So the second question was on like-to-like price increase in FY24 across various geographies.
Okay. The increase in for FY25 versus the old versus FY24, because we are launching several projects in Gurgaon, and also some of the projects that we launched in the current inventory which we launched in Bangalore also is at a slightly higher pace. I think we should see an increase of at least about 15 to 20% in the average price. And coming to the launches itself, like I said, part of the launches of about 50% of the launches would be in 60% of the launches would be in Bangalore and remaining in Gurgaon and Chennai and Kerala.
Sure. And so actually my question was about the demand environment in the various markets that we operate. Where do you see the demand environment currently being the strongest?
Right now, on a steady state basis, we are operating in Bangalore, NCR, GIFT City, and in Kerala. Each market is slightly different. The Bangalore market has been very steady, and we continue to see very good demand for projects across ticket sizes. In Gurgaon, particularly, there is an elevated demand for residential projects. And in Kerala, it has been very steady in terms of the demand, mainly driven by the NRI clients. In GIFT City also, as the progress of the GIFT City itself is seeing good traction, the demand for residential real estate there also seems to be very good. So, in fact, considering that we have last year we have sold out the entire remaining inventory that we had in GIFT City. So all these seem to be very high. And apart from these, there are other two locations which we would like to be a team player, that is in Hyderabad and in Pune. Hyderabad continues to see a very good demand environment. Similarly in Pune. However, we would like to see some more new investments there. Then only we can have a real good number out there for you in terms of demand for our products.
Sure, sir. Thanks and all the best.
Thank you, Parvez.
Thank you. Ladies and gentlemen, the next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Yes, sir. My first question is on we are ramping up our launches and we are totally backward integrated. So just wanted to understand, are you open as we are expanding into new geographies? So when you look at engaging external third-party contractors to do construction for you, so if you can give some color on capacity building there, given that, and also we can give some color on how your parent has been doing in Dubai, because their scale is 40,000 crores, so they also do, do they hire external construction companies, and whether in India also you are open to hire external contractors?
Good question, Parikshit. Our uniqueness of the operation is on the backward integration model, and that is something that we will hold on to. We brought up a good point wherein with the scale, how would we scale up the construction activities also. But as you know, in the past several years, we have been doing a lot of contractual work for Infosys and several other clients. And as we have been scaling up this, the real estate vertical, we have brought, and has been a descaling of the operations in those verticals. So we have a lot of talent and capability in those who we have moved to the real estate vertical, and hence we have been able to manage the capacity that's coming in now. Having said that, there is no doubt that we have to continue to build on this capacity that we have already built in. So that's an ongoing exercise. But for the time being, for the volume that we have sold and volume where we have achieved right till now, we are comfortable. And understanding the requirements for the future, we are ramping up our recruitment, training, and also some of the capacity buildings on our manufacturing verticals as well.
Even in Dubai, the parent is like doing it like backward integrated, or they outsource the entire construction?
I believe Dubai also follows the same model.
Okay. My second question is on business development. So you did touch upon that last year you acquired 5 million in Pune. So I assume that it should be close to 5,000 crores of gross development value. And regarding 2 million, the increase in the launches, that should be about 3,000. So is it right that you have added 8,000 crores of new business development last year? And if you can also help us understand whether in Bangalore and other geographies, how much you would have added in terms of gross development value, and what is your target for FY25?
We can assume that, Parikshit, based on the basic math that you just did. But as a company, as an ongoing basis, we keep doing new deals, and we did not start any practice of adding the specific deals and showcasing how much we are adding every quarter or a year. But roughly what you have mentioned, that's right. And you will keep seeing that in the newer pipeline of launches as we quarter on quarter.
Yes, last week around that.
For FY25 also, if our land spends are going to continue in the similar fashion like what we did, we should add every year at least anywhere between 8,000 to 10,000 gross value projects, which essentially replenishes the current ongoing pace of sales.
Okay, just lastly, in Mumbai, are any plans there? I mean, you're not reviving the Pune piece, getting into Hyderabad, seeing some traction there. So any plans for Mumbai? How are the engagements here? So how are you seeing Mumbai panning out for you?
We have started understanding Mumbai as a market at a very high level, and we are looking at some of the, or at least the local dynamics of the market is very different from many of the other cities. So there is a little bit of research and a little bit of understanding going on in the company. While we are doing that in parallel, we are also evaluating some opportunities. As and when they come to certification level, we'll definitely share.
Okay, sir. Okay, thank you, sir.
Thank you, Parikshit.
Thank you. The next question is from the line of Dhruvesh Sangvi from Prospero Tree. Please go ahead.
Am I audible?
Yes, sir, you're audible, sir. Please go ahead.
Yeah. In terms of price rise, I think somewhere someone asked that if you can compare Bangalore's like-to-like price rise over the last 1 year, what would it be? I mean, of course, it's very difficult. It is project to project, but is it fair to say that Bangalore would have risen for you by 5 to 10% or more in the price rise?
No, there are certain projects, Dhruvesh, where we can see a comparison of the projects where there has been inventory sale in the same project or during the whole course of the year. If you compare only in those projects, because it's tough to compare one project to another project, if you do that, then for us, it's definitely been over 12%.
Over 12%. Okay. And what would be your outlook on that aspect be again same Bangalore like to like for the next finite period of, let's say, 1 to 2 years, or now it looks that we are now saturating on the upper side for now?
It looks that the price increases in the last 2.5 to 3 years has been pretty good, and at least we do not plan to. We don't have plans where the outlook is far higher than what it is. Inflationary is what we would expect, but it again depends on the project to project. Some of the projects, once they get successful, then we do see price increases.
And one question was on Karma. I believe it's a JD. There's a partner involved, and the land was purchased, or the tie-up of the land had happened much back into the history, pre-COVID. So how did the dynamic work? Because the pricing in that area has dramatically shot up. So do we get a chunkier pie of the incremental that would have happened in that area from the time of the lock-in till date, or is it a complete pass-through where, it's not much favorable to us?
Specific to Karma project, Dhruvesh, that is a DM project. So the overall dynamic, there has been an increase in the pricing. There is an increase in the cost too. So in a DM project, it is I think our margins are largely stable with respect to the market.
Okay. It's a DM project. Fine. Thank you. Thanks a lot.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you. Financial year 24 has been an exceptional year for Sobha. It underscores our team's focus and commitment to growth, and Sobha's strong brand value in the consumer mind and deep stakeholder trust. In this year, not only we delivered good operational performance, but we made significant progress to strengthen our foundation for future growth. We are now very well positioned financially and operationally to capture the growth opportunities that India presents in this upbeat economic environment. I hope in this call we have answered some of your questions satisfactorily. In case of any further questions, please do reach out to us. Thank you. Have a good weekend.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.